Welcome and good morning to the Major Tuesday this week. Major Monday has been delayed simply because I had to pick up my fiance from the airport and it's a long way and it's quite a rough journey and I had to cross a mountain path and so the whole journey takes pretty much a whole day. So I couldn't really make an update last week, but I pretty much covered like what's important for the beginning of the week in the live stream on Saturday already. It's also uploaded to YouTube, so you can check that out. But let's dive into crypto majors. We have some weekly closes, we have some bounces from the levels. We are long, as I said last week. You can also look at the weekly closes. Looking at the weekly close, we have another close below this low, below this low. So we just keep on printing lower lows on higher time frame. But this doesn't mean we need to go down in a straight line. As said many times before, we can long on the way down, we can hedge our shorts if we have some, and simply making some money on some counter trend bounces. And I mean, if you caught the whole like the wick low, price bounced already like 13% or something. So it's quite a significant move percentage wise. Obviously, with increased volatility, our stop loss is going to be wider. And because I'm not around like my office all day long lately, I play my positions wider and safer. And this is also way more relaxed. We also had the refined BTC level here at range low demand. I TP'd 60% of this short. This one is completely untouched. Still, I'm trying to trail it into the bear market, hopefully. So this to that, I also built some, um, where is it? Some altcoin positions. I see them basically as the same position as ETH. I see a good case that we at least bounce up here. I mean, it's not the most sexy trade, but I think there is definitely a case to be made to be on the long side right now. We're going to look at the majors as well. But simply said, I wanted to have some more crypto allocation. My top short from BTC is quite huge. I wanna hedge it somehow, and I expected a bounce across the board. And so instead of buying spot, I bought those positions low leverage. I mean low leverage, yeah, 3 to 4 or 5x. I'm not even sure. But so that I chose a leverage that my return of investment is not more than minus 50%. So I'm secured or protected against a potential liquidation wick. So I only pay my stop loss, not the full like position size, my full margin. That's why I don't go with more leverage. But I mean, even with a 3x leverage, I can like use a third of the margin and also have way more control over my positions. And for example, on ETH, I'm already at break even. I scaled up the leverage and I removed my margin, and now I can use the money to do something else. I can build a short, can build another long, buy myself a lollipop, whatever. I can use this money for something else now. So it has many advantages, and especially because I think this is nothing more but a counter trend bounce. I don't see a real reason why I should buy spot, because spot gives me less control over my positions. It gives me not the option to remove my margin. And if it's on my wallet, it also takes some time to send and all that. So I usually only buy spot if I'm like want to hold my position longer than for 1 month, 2 months, 3 months most of the time. And I don't see a real case to do that right now. And at the same time, as said, I mean, I can like buy the same amount of coins basically with less margin. So yeah, it's pretty much a win-win to do this on perp. I think many people simply want to buy spot because they made better experiences with spot, because perps wreck a lot of people because of the leverage, because of lack of knowledge and all that. So many people would like to buy spot simply to hold and forget, but I don't think this is like the part of the cycle where you should buy and forget your coins. I mean, in April was such a moment, and obviously in 2022, and we maybe get a moment like this in 2026. Um, and obviously also if you want to buy spot simply because you don't know how to handle leverage and you can like handle spot better, why not? But as said, I think people mostly want to buy spot simply because of like the emotional connection they have to spot, not because of like logical reason, but spot feels better because it feels safer and you can just buy it and then you let it on your wallet. It's not so easy to fumble the position and all this stuff. And as said, if it's working better for you, obviously just go for it, right? But for me, I'm able to handle perps well. So as said, it has only advantages to me. So yeah, altcoins. I'm not in a Bitcoin long, but I see like the altcoin longs pretty much is still like a hedge to my short here. because the whole crypto market tends to move synchron. So let's have a look at majors. I've shared this chart last week. Don't know if you have seen it, but pretty simple. We are at the range high. We are at an area which has reacted already once, two, and now a third time. We made a major swing failure pattern at this high. The daily body here closed within the range, within this area. Big wick at the top. Now we're reacting kind of aggressive, so the plan plays. So simply put, we long, we buy here. And now from a logical perspective, looking at the structure, we might simply retrace. I mean, I don't say we go back to the 0.5, but this is definitely an option. So, and should we go back to the 0.5 here, which is marked out as key area as well, I'm definitely gonna try to short again, try to TP again. I mean, this is a very reactive area, and I don't need some kind of odd refined breaker block to confirm this, that this is going to be an important area. And I've also written here, close above the 0.5 mid the range highs likely, and this led to some questions. I don't say we close above here and we teleport up here like we have right now, but like the 0.5 of a range is usually the first area of big resistance. And without us closing above, there is no potential range highs in play. And usually people look at the chart, they go long here and they target something up here, all-time highs or even higher. But what I wanted to say with that is we target first something like this. We can, if we, for example, use this chart, we open an area which would be, for example, our BTC short, right? So if we long tether dominance here, we long basically USDT, so we buy USDT, right? So this would be the setup and we target range highs, and our first TP should be somewhere here because it's the first area of resistance. And everything you do within this area, you refine, obviously, and you can refine, but just because maybe one of those levels gets skipped or like doesn't work doesn't not mean the resistance is already cleared. We talk about this higher time frame area here, and once we close above, we can then entertain higher targets, which is then the range high. And this would be now like I TP'd on this on this one short on BTC, but not on the other one because of context. But I TP'd and I longed, so I'm a buyer up here, and I sold my USDT more or less, or my stable coins. Doesn't really matter. And so far it's playing out. And should we break out of this, we target something else. We target the next range high or the next supply area in this case. And we take it level by level. We don't open a trade and target something like that simply because we want to see 10% USDT or we hope for it or whatever it is. We don't do that. We target level by level, step by step. And now we are at this range high major area. So I said I'm going to be a buyer here, and I am a buyer. Yeah, so I hope you too. And the thing is, even though this is a very likely area to take a position or a very high probability area, it does not mean it needs to work or something like that. It simply means there is a point on the chart where you can manage your risk around. And that's why we manage risk, because we trade probabilities. And if we break out of here, I mean, I removed some risk already from those trades. But should we break out from here, I either take my stop loss, I close the position, and the level simply didn't work. But you always should expect a level to work until it's not. And the best example for example is total 2, because we have this best case target here, but it's price discovery. And this is like here the example is even better, because if you manage to buy the April lows because you were not biased and you were simply listening to the charts, you may have ended up in a very nice position, higher time frame wise. And you can even target this, right? So maybe you say, okay, good, I'm buying here, I have this best case target, maybe it works. But what you should do, and what you should always do, this is not just like for total or for altcoins, for every asset on the planet, you should handle it more or less this way. So on higher time frame, this is our swing down, right? So let me remove some stuff here. So what? Bar replay isn't available. Okay, doesn't matter. You can imagine like this PA is not here, you go long here. You should think about TPing here simply because here is supply, right? So we have some consolidation and we have a nuke, and the 0.5 of this area of this swing was here, and see where we rejected. and we went down almost all the way to this demand, almost all the way to our entry in this case. So this should be a first area of interest. With the next, like we maybe have even some closes above. Let's check that. We have some slight close above, so I wouldn't count them as very strong. But nevertheless, like we closed here, and once we cleared the 0.5, range highs became likely. And this should be the next area of interest, right? This is our key level. And this is the next area of interest. We are going to TP, sell, short up here. And this is not just this area, but also like the higher time frame supply up here. And to expect something like this is totally nuts before all other resistances are cleared. Um, this is what people usually do, and why they round trip everything, because they have good intentions and everything, and then you have some vertical move like that, and then it's not enough, and then it's like, oh, how far can I push this trade and everything, and then it's simply doing this. So why? Because it's higher time from supply, and altcoins need to be traded. Altcoins are in a kangaroo market, they are in a ranging environment more or less, and so you want to sell the range highs and you want to buy the range lows. And if you kept on repeating this cycle, it made a lot of money. And you don't need perfection for this. You don't need to be like totally precise on the dot. It's about this general area up here that delivered this reaction already twice. And we also had the 3 drive here. So being too bullish up here is not a very good idea, structurally speaking. But now we came back to this demand. And as said, if you refine something, see it as refinement. But in general, we talk about demand here. This whole area is demand. Obviously, you don't want to go long here, have a 30% stop loss or something like that. You want to refine a little bit, but see it as what it is. It's refinement. It's not that you need to be perfectly in here with a 1% stop loss on a 100x or a 50x leverage. Not necessary to make money. This is the reason why people get oftentimes, once they start trading, also wrecked again, because they're too greedy with R, they're too much into refinement, and they refine more than their level of expertise allows. And I say this over and over and over again: aim for a high win rate and then increase your R. Once your level of expertise rises, so your R should rise. But if you're just starting out and if you're still lacking a lot of experience, don't aim for crazy high R. It will lead to a lower win rate, and this will lead to more emotional mistakes. This will lead to more emotional baggage, and this is not what you want in the beginning, because everything like emotional, let's call it trauma, you collect, you will have to work out later on. So if you from beginning doing the right things, more or less, managing your risk properly, aiming for a higher win rate instead of being RR greedy, leads to less emotional baggage, leads to a way easier future, trading future. So this is what I usually recommend. Obviously, you don't have to listen to that, but this is what I've experienced and what I see if I observe people in their learning stages. What helps them a lot is aiming for a higher win rate, not being too RR greedy. It's a 3-4 hour trade is a very solid trade. It doesn't need to be a 10-hour trade to be a good trade. And rather you have a lot, like we have a 50% or 70, even 70% win rate on the solid 3R, instead of like a 30% win rate on maybe 5R, which is also profitable, or 10R, which is also highly profitable. But many people can handle the losses. And imagine a 30% win rate. I mean, many people can probably imagine, especially in the beginning, this is like a usual number, 30% win rate or something. You lose 7 out of 10 times. And the problem is not that this strategy won't make you money in the long run. The problem is that people can't follow the strategy for long enough, because if you lose 7 out of 10 times, you will make emotional mistakes, you will abandon the strategy, you will hop from strategy to strategy, and you will lose focus, or focus on whatever kind of super secret somebody wants to sell, that will lead to better results. But in reality, oftentimes is playing setups too tight, refining too much for the level of expertise people have. And so yeah, see refinement for what it is. So ETH BTC, still below this trend line. I mean, technically we closed above, but I don't look at this trend line as this perfect, like on the dot millimeter precise trend line. It's rather this area. And also look at horizontals. If I remove the trend line, if the trend line buys, we do nothing but like making lower lows here for now. Once we start clearing these highs here, let me mark them out real quick. Once we start taking those internal highs, we can then maybe entertain a potential shift in trend, and we maybe go for those range highs here, or at least the 0.5. But don't expect anything that's not really on the chart yet. Obviously, we can prepare for this outcome, and this is why we take longs at the most probable areas. But at the same time, like expecting this next without the 0.5 cleared, without not even this one cleared, not even a slight change of character, change of trend, break of structure. Yeah, it's forcing a bias where there is like the chart is not supporting this. And this is also why I TP'd 33% on the on the ETH long here. It's not the greatest R2TP, but at the same time, most structure is still pointing down, and I just simply want to remove some risk, make some money along the way, still prepare for every outcome. Doesn't need perfection. So BTCD still in a downtrend, not that bullish for altcoins for now. Maybe we get some kind of reaction here. We will see. We will see. Also, this chart going down, many people will probably know by now. If this chart is going down, doesn't need to mean like altcoins are going up, right? I mean, right now is the perfect example of altcoins are not going up while this chart is going down. So keep that in mind. Don't force your bias, and don't listen to people who look at this chart. I mean, if you if you go on X, it's so ridiculous. Like people, they have those phone charts, and then you pull up the chart like this, and then it's like BTCD is nuking. Yeah, it's like altcoins are going up, and it's like, oh, dude, what the fuck, man? And those people, they have like 100K views on those posts. People listening to them. Yeah, it's the whole space is really ridiculous. And to be honest, X is probably the worst platform, social media platform I've ever used. I mean, I like it. Don't get me wrong. I like it. I like text-based posts and all that kind of stuff. But the algorithm, man, it's like the worst algorithm of them all. It's made to like manipulate people in such a bad way, because it's not just like, I mean, take Instagram, take Facebook, take those. Obviously, they also try to make you hooked. They try to make you spend as much time as possible on the chart. Sorry, on the platform. But X is really not just like doing that, but also misinformation and misguiding people into taking like horrible financial decisions with their algorithm. And I mean, they're not just like hooking people to the algorithm, they're also like taking their money like on the other side. So one hand is playing and doing like fun stuff, and look, and X is also covering below this um yeah, it always looks like it's smart and it's informative, but in reality, it's total bullshit most of the time. But it looks way smarter than, for example, if you pull up Instagram, it's full of dumb videos and stuff. But it's not pretending something that it's not. It's dumb videos, right? I mean, people pretending something they're not, obviously, but the platform itself, okay, it's reels, it's dumb videos, it's photos, okay. X is always pretending, or it seems like it's such like so rational and so smart, and you learn so many things, but in reality, it's so often it's just garbage, like covered below the hood of like sounding smart, looking informative and stuff like that. And especially in the financial sector, X is probably the worst platform for people to use. So the For You page is like, it's, yeah, it's total crap in my view. Other than that, let's look at USDC real quick. It's doing the same thing that USDT is doing. It's swing failure pattern from the highs. Be more bullish. I posted this chart as well. Yeah, it's the same stuff, right? We are range high, so now I expect a rejection maybe to the 0.5, and I'm long for that, and I TP'd on my short for that. I'm more bullish right now on other coins. And it's as simple as, if we break out from here, this is nothing but air. We probably go up here, use around USDT. I've shared a post already where I made my thesis about the like what's going to happen to the stablecoin market. I mean, if you look at the whole stablecoin market, it's somewhat shaping up like to become the CBDC thing. And I think USDC is a great candidate for that. And obviously it's gaining more share like all throughout the year already. And I think once we clear this area, let's take this with us into account here. But I think if we clear this area, we're gonna teleport up here, And maybe we see USDTD this time like really collapsing or something. Who knows? Who knows? As I said, I have two theses about this. Either like USDT USDT is either part of the big plan and it's all staged, so it's part of the big plan from the beginning, and we don't have to fear a big DPEG, or we have to fear a DPEG because it's part of the plan. Maybe it's all written in the stars that the Tether should collapse for the sake of like some savior coming up, like USDC. Everybody loves USDC after because people did not lost all their money. And this other thing is like so Tether is not part of the big plan, and it's more or less like it's gonna be destroyed by those in power because they don't want to have somebody printing money out of thin air, basically. And maybe USDC is then again the great savior. So I think it's gonna be way more important in the future. So have this chart in mind as well. But for now, it's pretty much the same picture as in USDT. We are at the range highs. I expect a reaction here. I can like manage my risk properly around this area, and this is what I do. Take trades with risk management. Good. That's it. Major Tuesday next week is gonna be Major Monday again. As said, this week was a bit different, but I think we did not miss anything important yesterday. Have an eye on higher time frame structure. Should we be able to clear the 3K area coming up here? This is the first area of supply on ETH. We maybe can entertain some higher targets, but for now, this is a downtrend until proven otherwise. Don't force your bias. Don't have unrealistic expectations. Manage your risk and have a great week. We talk next week. Bye bye.